Embattled wealth manager AMP has revealed its shareholders have been hit by a $2.35 billion write-down in goodwill and capitalised costs following the Banking Royal Commission. Business reporter Chris Kohler joins us live. Now, Chris, there were a few interesting takeaways from the AMP end of financial year results. Walk us through them.
Yes, absolutely, Annalise. Good morning to you and to Kieran. Look, it was kind of a messy set of numbers, the half-year results from AMP, and certainly a whole lot for shareholders to try and get their head around. Looking first at the profit and loss figures, the headline net loss of $2.3 billion would certainly grab the attention of shareholders. Within that, though, an underlying net profit of $309 million. Now, that initial $2.3 billion loss, as you mentioned, a lot to do with the writing down of value to a lot of AMP's core businesses as a result of the Royal Commission. Now, other headlines would have been grabbed on the fact that it struck a deal to sell its life insurance arm for $3 billion to Resolution Life. Now, that is $300 million less than previously expected, but a higher proportion of the sale is made up in cash, which AMP is going to be pretty keen on at the moment, because yet another part of the result is that it's going to try and raise $650 million in a heavily discounted capital raising at $1.50 per share, which is why AMP's shares are halted this morning. Now, this is all part of a 3-year plan for AMP, which is aimed at fixing its advice businesses and cutting a lot of financial planners. On the results, relatively new CEO Francesco Di Ferrari said 2019 is a year of transition for AMP as we fundamentally reset and de-risk the business. The first half result reflects the challenges that we've faced and our actions to address them. So certainly not shying away from the fact that it has been a horror run for AMP. Just 4 years ago, the share price was up around $7, and now they're raising capital at about $1.50. So really horrible stuff. As you recall, AMP was one of the worst performers out of the Royal Commission, charging for services not rendered, charging dead people for services. A lot of the stuff, Annalise, that you can read in your book, Money Spinners. But yeah, certainly not a good performance there at the Royal Commission from AMP.
Yeah, very good read, by the way, Annalise, with her new book. But indeed, a shocker for AMP. How's the rest of the market looking? Because we had a bit of a shocker earlier in the week. How's it tracking today?
Certainly did, Kieran. Yes, unfortunately, Monday and Tuesday were horror sessions, and it's not looking a whole lot better today on Thursday, down around 0.75% at the open at 6,470 points. Yeah, around $86 billion wiped off on Monday and Tuesday. Wednesday was a bit of a breather, and then sinking further today. So it is shaping up to be the worst week on the local market of the year. Rio Tinto sinking sharply and not helping things at all. We saw big falls in the iron ore price and the oil price overnight. Looking elsewhere as well, AGL Energy also released its full year numbers today, kind of eclipsed by AMP, but its shares are down 3.7% despite the fact that it beat earnings estimates, but it did flag that earnings might slow down in the future. So 3.7% wiped off AGL Energy in not an all too bright looking day for the ASX 200.